Hello everyone, welcome to my channel, and today we are going to cover the modern banking system, origins, mechanisms and societal impact. I hope you are doing well, and I hope we are gonna learn something new today. Let's start. So we have a presentation and a simulation, like uh, I've been doing this for some time, and I think this is a good way to visualize the stuff, what's going on, you know. Okay, so imagine a world where every dollar you spend slowly rolls uphill, and not by accident but by design. That world is right now, and it all starts with how banks creates the money. Okay, really I wanna show you something, and on the simulation you might wanna see or understand what is it really. So the current system has interest. The current system has something called fractional reserve that like let's cover that. Let's see. So we have some core topics in modern banking. um, I will like I would like to talk about the historical origins, how credit and debt create money, and that is fractional reserve, and interest and economic inequality, and psychological and societal impact. On also global trends and future systems I wanna talk about. So to understand where we are, guys, we need to see where it started. So as you can see, the money, these things that on the screen with the simulation, those are money, but some of them are bank created debt, some of them are interest, and some of them is the deposits that we deposit, or the people who has more money, they deposit mostly. And here's the trick. Okay, as you can see, deposit is 200,000, but while the credit is now 2 million, so that is crazy. So 1300s Florence, families like the Medici weren't just rich. They invented tools we still use today, like ledgers, branches, and banking networks. They founded in 1397 in Florence and pioneered double entry bookkeeping and helped shape international banking. Banking families like the Bardi and Peruzzi dominated Europe's early financial networks. So early banks issued paper receipts for gold deposits. Over time, this evolved into fiat currencies, especially after Nixon ended gold convertibility in 1971. So, for example, when you deposit $1,000 in a bank, it keeps just a slice, let's say 10% right now, and lends out the rest. That lent money becomes someone else's deposit, and which gets lent again and lent again. So your $1,000 becomes $10,000 in the system. This is called fractional reserve banking, guys. But here is the kicker: the new money didn't exist before, it was created as debt. Okay, if debt creates money, then interest creates the funnel, guys. So this system designed to take the money upward all the time. If you have more money, you will have more money coming up. So when banks lend money, they expect interest back, not just the principal, right? Over time, that interest grows exponentially. That's compounding. And of course, wealth starts to rise, and those with more money see their gains accelerate, while the all like the debtors, the people who has debt, has more debt over time. So the Rothschilds expanded banking across Europe, funding governments and railroads. They pioneered bond finance and become powerful players before central banks were even institutionalized. So I explained the fractional reserve. They keep 10% and then lend like the rest. So this keeps basically banks creating money. And but really, it is not just about numbers, guys. It is about lives, because debt is now baked into our lives. you know. There are almost everyone has some kind of debt, and student loans, mortgages, credit cards, whatever you call. Millions live with constant pressure to keep up. I think debt is causing some anxiety on some people, right? And like, for example, people stay in bad jobs or bad situations just to avoid default. Because if we cannot pay, what are we gonna do? You know, then they will cut out our credit score. There are, of course, you know, some kind of like they make us scared of something. You know, always, if you don't do this, then this will happen to you. Yeah. Okay. So it is quiet. It is normalized, but it is not healthy. Okay. Compound interest grows wealth exponentially, rewarding savers and lenders while potentially overwhelming borrowers. It's a powerful engine behind financial accumulation. As you can see in the um, simulation, everything goes upward, guys, upward, and this, as you can see now, even 14.5, it is not increasing no more right here, but it is actually like 45% in our current world. uh yeah, I don't wanna say now. Let me see. 1% richest people hold wealth. Okay, almost half of the world's wealth. Our world in data 2023. So in some areas 45%, the first like 1% people, and this is 2023. I mean, in South Africa 55%. There are like, in even in United States is 35%. Wealth share of the richest 1%. I mean, and it is increasing everywhere, guys. Look, oh, here is not increasing, decreasing here. It was 42%, now 25. That's good. Colombia, Mexico, Brazil, these kind of places are pretty in a bad situation. Turkey, Yemen, like almost half, as you can see, like 1%. So Abrahamic religions traditional condemned usury, like the interest is not, it is forbidden in Islam, still forbids interest, promoting profit sharing instead. Also, early Christian doctrine also viewed interest as morally exploitative. Interest fuels economic growth but also contributes to inequality. Over time, it concentrates wealth among capital holders because it is designed that way. So central banks set the rules, commercial banks play the game, and institutions like the Fed or ECB aren't fully public at all. They are hybrid, and that there is EMF. They give money to some developing countries, and then they often attach some, rules. You need to do this if you want money and stuff. It is like, comes with strings attached. Um, of course, big banks profit from fees, interest, and even crisis bailouts. So wealth flows upward, guys, as you can see, but not as a, they are not seeing this as like, oh my god, this is wrong. We need to fix this. No, this is a feature. You know, this system isn't just inequal. Also, it is fragile. It happens multiple times, and from like 1929, 2008, there was failed banks. People lost so much things. 2008, loans on risky homes got bundled, sold, and collapsed. And future banking, like, what are the alternatives, right? There are some alternatives that I'm also working on something. related to this thing. So CBDCs and digital cash. They are exploring the digital currencies right now, digital cash, but raise concerns about privacy and financial stability. Sorry. Fintech and mobile banking, digital first banking apps, and mobile wallets are displacing cash. Um, Displaces blockchain and DeFi innovations, like decentralized finance uses blockchain to bypass banks with smart contracts and peer-to-peer lending. This is actually sounds really good, like the Bitcoin and stuff. But right now, the usability of this kind of things, this kind of coins, are not there. You know. So, for me, um, I am really working on decentralized stuff, peer-to-peer lending, peer-to-peer networking and stuff. So I see the future in centralized economy, but of course that who knows. Um, so no system is perfect, by the way, but there are some ways. This shows us one thing: banking doesn't have to be extractive. There are even local currency projects where money stays in the community, or like credit unions are owned by their members, not profit driven. Cooperatives. Some people might wanna get together and put their money into some investments like buying homes, uh, buying businesses, etc. So uh, currently it is like a rule. You have to have a modern banking, otherwise you might not be even able to rent places. So I think uh, like we need to be aware of this and say something, say the truth about this. Like what we are really thinking about this kind of systems that exploits us. um, because I don't know, I am not in the elite 1%. I think if I am, I'm not sure. I mean, I'm a worker. I'm working in a software company. I'm not sure if I am in the elite 1%, but I am not getting interest, or you know, uh, I don't have much money, guys. I don't think I am in the elite 1%. It's okay. I mean, I'm always saying, like, I don't wanna have so much money to make me someone bad or exploit others. So I'm grateful for what I have, thankfully. So what we can do now, we can learn, share, and talk about money, but honestly, and support ethical banks, cooperatives, or local alternatives, or we can stop using interest because it is basically exploits us. And if you don't understand the system, we end up trapped inside it. That is why I wanted to just share what I am thinking. While modern banking has enabled growth and innovation, it also contributes to inequality and instability. Alternatives like Islamic finance, DeFi, and cooperative banks show that change is possible. So, thanks for watching. I hope this opened your eyes a bit. Let's build something better together, hopefully. I mean, İnşallah arkadaşlar. Please, if you like the video, share, and comment if you have feedback, if you wanna say something. The simulation got really slow. Okay, thank you. Yeah, you have a great day. Bye.